Professor Abhijit, Dr. Verma, my senior and of course a dear friend B.D. Banerjee, Mr. Mathur, Mr. Arun Agarwal, Mr. Mishra, my daughter Deepti, ladies and gentlemen, I don't think you are ready for a speech now. You had enough of it for the last 4 hours plus, but now here you are called, and then what do? You have to make a speech. Let me tell you frankly, ladies and gentlemen, to receive an honor is a very humbling experience. I come from a very humble background, and therefore, whenever somebody tries to praise me, I get into a bit of a challenge. Insurance industry has already given me enough. It gave me name and fame, and it gave me health and happiness. I was not even a dot in the milieu of a social crowd, and suddenly people started recognizing me as a name. It gave me a transition to a world called a larger finance, and also from there on to academics. I've been a professor, I'm still a professor, now of course Professor Emeritus. This all came via insurance. He is absolutely right that I keep a good health. If you're not surprised, be surprised that I play golf very regularly, and tomorrow is my golf day, and I walk. Oh my God! And I walk 8 kilometers without a buggy. And whenever some of my younger guys, friends, want a buggy, in fact, one of the caddies wanted, "Sir, buggy le lenge?" मैंने कहा आपको बैठना तो ले लेते. But that is because in the early days of life insurance, when I was being trained for underwriting, the fact that we had to study was called BMI, body mass index. And therefore, I keep my body mass index is still at the level of being eligible for insurance. But eventually, yeah, this is one which, because the insurance business, notwithstanding the fact, where is the gentleman who was saying, it's actually a pull product, but the industry thinks it's a push product. And therefore, I had also to push product because we were experimented to become a branch manager, and of course, eventually had a long journey as a marketing guy. The next came the happiness. And what else can make you happy than seeing friends like you still looking at me and not thinking he is a fossilized person to be buried deep into the archives of the obsolescence and not to be looked at. This is all. Now, since you today decided to give me award, I very humbly accept this. And I don't know whom do I dedicate this honor, because possibly I don't deserve it. And if someone who deserves is the people of insurance industry, who accepted me as a co-worker during my youth, as a coordinator during my maturing years, and as a commander when I started losing my hairs. They helped me, they trained me, they supported me, and even directed me. There was one person who is possibly watching from above the skies, who shouldered part of my fatherhood responsibilities to spare me to run for insurance events. And of course, all of you who love me. But friends, today, what should I give you before I leave this dais and sit down on my chair? I'm an idle man. Honestly speaking, I have nothing except to think through. And when I was looking at this industry from a very dispassionate angle, as a grateful person who has got all this name, fame, health and happiness, and also a recognition in the shape of an award, I am looking at insurance industry in a kind of existential hunger. And this is a radical thought. I was telling Professor Pridarshi when he was very kindly accompanying me to the institute, a long journey of hour plus, that I have myself redefined insurance. According to me, insurance industry or insurance is intermediation of democratization of risk. Who has this misunderstanding that the insurance company holds risk on its own portfolio? Hey, it doesn't. All that it does is aggregates, commoditizes, and distributes, and watches bated breath what happens to the customers on the both end, the buyers and the sellers. Now, what is expertise is what is called a risk assessment, and the pricing of probability of that risk falling onto those people who are franchised. Now just look at it. The geopolitical, the financial, the health, the ecological. I mean, there was a gentleman who was trying to expose to us the kind of climatic changes. Well, to my mind and to the level of the studies that I have done, I have an interest in it, and I think Professor Ajit was right. I wrote an article 30 years ago, where the byline was that we are destroying the future of future generations. And I quoted in BIMTECH that here is a young brigade led by Greta Thunberg who shouted on the faces of the representative of the planet Earth, "Who the hell you are to destroy our future?" Now the point I'm making is even the depth and the extent of the climatic changes that are affecting not only the physiology, the politics and the economics has not been understood even. Now look at the rapidity and profundity of changes which are making assessment of the risk itself very, very difficult. I'm sure you have been watching that both World Bank and IMF have revised one simple construct. I don't consider GDP as real evidence of a prosperity of a nation or a geography. It's only a construct. And why? Maybe offline, some of you who have an interest, I can discuss with that. How many times? And therefore, your own ability to be able to assess the risk is threatened. And let me digress a bit, and this is my feeling that the isolation or desocialization that was necessitated by COVID has aroused the sentiment to the surface of an individual, hey, I'm me, I'm not we. Please treat me as me and not we. And before I go forward, what impact it has on the insurance industry is that the politics is prisoner of the society. And individuals shape the societal trends. Now let's put this together. What is it you're doing? You are aggregating, let's say, motor risk, or the driving risk, or the ownership of a motor, and the driving risk together, of all the people who are wanting to de-risk themselves, and then commoditized and distributed. He says, am I a fool that I should be paying for a Joydeep who drives 100 hours a month? I don't drive even 2 hours a month. He's a smoker also. I don't sit and smoke in the car. No, I'm only trying to say is that he is insisting I am me, and therefore what insured technology is trying to help is accessibility, affordability, and personalization of service. Now put these factors together, my dear friend, your ability to assess the risk is threatened, your ability to be able to bundle up the risk and commoditize is threatened, and someone was saying, Amazon era. Customer is wanting the experience of Amazon. They are not interested, like Professor Manoj Pandey was quoting the instances of the kind of customer service. And you know what, the development is silently taking place. The regulators have still to work on peer-to-peer insurance. Mutual insurance industry back to the rails. Now, all that I'm only trying to tell you is, my dear friend, the interdependence of society, politics, economics, technology, and now environment. The kind of impact it has on the finances is capricious. And in that environment, for you to be able to assess the risk, and when individual says, I am me, to aggregate it, commoditize and sell is threatened. Your current business model and the organization design in particular, which is multi-layered, hierarchical, functional, misaligned responsibility and accountability frames, and disjointed reward frames, is no more useful. Or therefore, if the insurance industry, and since the insurance senior professionals are here, I would strongly recommend, please sit back, don't go back with comfort. Someone was saying, if I make someone uncomfortable, that's my success kind of thing. Sit back. The industry at this point in time is on a cliffhanger. The pools of profitability that are being used by the insurance industry, you know what is? There are 3 pools of profitability. One is, call your process of assessment of risk and pricing the probability of the risk. This is one pool of profitability, which you call it acquisition cost and management expenses put together. The other is actual happening of the probability that you assess. That is called the event. And the third one is yield on investment, and actually it's not your investment. Thanks to Section 64 of the Insurance Act, you collect the premium in advance. And till such time you have to pay it off, you make investment and say yield on investment, which itself has become now very difficult to assess whether it's going to be 7% yield or 6% yield. And therefore, can you imagine your core business of risk assessment, commoditization, and distribution is making losses. All that you have been thriving on has been on yield on investment. This lazy insurance business is not going to add to your sustainability in the current organization design. And therefore, let me leave you with this thought, ladies and gentlemen, that please sit back. Here's an old man who has been thinking through this process, being obliged not only to BIMTECH for giving me this award, not only to the jury who decided that this fellow should be given an award, but also to the people of industry who actually are the owners of the award. Thank you very much, ladies and gentlemen.